Russia's central bank is launching a formal study on issuing a ruble-backed stablecoin, marking a major policy shift amid global digital currency competition. This move, driven by sanctions and the need for alternative cross-border payment tools, will see the bank assess risks, regulatory models, and international trends. Findings will be released for public discussion before any decision, potentially reshaping Russia's digital asset landscape and influencing global stablecoin development. What really caused the split between Binance and FTX? CZ reveals that Binance invested in FTX in 2019, but rising rivalry and regulatory tensions led to a full exit by 2021. CZ insists Binance had no inside knowledge before FTX's 2022 collapse, highlighting how competition and mistrust shaped the fate of two crypto giants. Brave's security team has uncovered vulnerabilities in zkLogin that let attackers impersonate users and steal credentials, exposing millions of blockchain transactions. The flaws stem from weak protocol restrictions and inconsistent JWT parsing, affecting SUI ecosystem wallets and privacy. Zero-knowledge proofs can't fix broken authentication infrastructure, and user data is at risk from third-party services. Researchers urge protocol-level changes and strict issuer validation to protect digital identities. Polymarket and Kaito AI are launching tradable attention markets, converting social media buzz into real-time price signals for Ethereum traders. Contracts will track influencer reach and engagement across X, TikTok, Instagram, and YouTube, offering new tools for anticipating crypto flows and volatility. Japan-based traders can use these signals to bridge overnight news gaps, monitor ETH sentiment, and refine strategies as the first contracts go live in early March. Hackers exploited a social engineering attack on Figure, leaking personal data from a blockchain-based lending platform. Shiny hunters claimed responsibility, publishing 2.5 gigabytes of customer information, including names, addresses, and phone numbers. Figure responded by offering free credit monitoring to affected users, highlighting ongoing security challenges for fintech and crypto lending platforms. BlackRock just withdrew nearly $400 million from Bitcoin and Ethereum ETFs in a single week, signaling a major shift in institutional sentiment. The outflows, led by $261 million from IBIT and $112 million from Ether, highlight how big players are managing risk amid volatile crypto markets. This move reflects a cautious, risk-off approach as Bitcoin struggles below $70,000 and Ethereum holds near $2,000. Hundreds of Arkham exchange users just received urgent emails. Withdrawals only until February 28th. Facing low trading volumes and fierce competition, Arkham is winding down its centralized exchange, leaving users uncertain about future airdrops and the platform's direction. Massive $667 million quarterly loss at Coinbase reveals just how brutal crypto market swings can be. Despite record trading volumes and growth in subscriptions and stablecoin revenue, unrealized losses on crypto holdings and strategic investments dragged earnings deep into the red. The company now faces mounting competition and regulatory uncertainty, testing its push to diversify beyond spot trading. Nearly 2 years after the $200 million Mixin network hack, a dormant hacker wallet just transferred $3.85 million in Ethereum to Tornado Cash. This move highlights ongoing risks of stolen crypto assets and could impact investor confidence, even as Mixin plans to repay $23 million in MDTU tokens by September 2026. The event underscores the persistent vulnerability in cross-chain platforms and the challenges of asset recovery and decentralized finance. VanEck has confirmed that 13 national governments are now actively mining Bitcoin, signaling a major shift from regulation to direct participation. This move lets countries monetize surplus energy, build digital reserves, and influence the network's security and decentralization. As sovereign mining rises, Bitcoin is evolving from a speculative asset into strategic infrastructure for states worldwide. A $1.4 billion drop in stablecoin supply on Ethereum in just 7 days is raising eyebrows across the crypto world. This sharp contraction signals major capital movement, possibly from profit-taking or shifting to other chains amid macro uncertainty. With stablecoins acting as the backbone for DeFi and trading, this liquidity dip could impact volatility and market sentiment, but experts urge caution against overreacting to short-term data. A recent audit uncovered that 22 Bitcoins, seized by Seoul police in 2021, and stored in a cold wallet, vanished without detection for years. Authorities are now investigating whether the loss was due to internal flaws or security breaches, raising serious concerns about crypto asset management in government hands. This incident follows a previous case where 320 Bitcoins disappeared from another office, highlighting systemic vulnerabilities.